Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, May 27th, 2020. We will keep it quick because just kind of more of a refresher of today's opening video and really yet what I posted yesterday at the end of the close. We've came close, but we don't have those sell signals yet on the Qs. The Qs meaning QQQ. What we had this morning when I started the video, I led with this chart for the on the coverage of the market, and it's a 60-minute chart of QQQ. We are right here about where the crosshairs are, and you can see we came down and we made almost a perfect test of the trend line. So first and foremost, this is the index. You know, the market's not going to break down until the Qs break down, I'm sorry, that's not a check mark. Well, for the bulls it is. It's a successful test of that trend line and a bounce off it. So that's it. So we're still watching this. We need to see, and I think we'll get it. We're very close today, so I still favor it happening. But as of now, there's quite a few check marks for the bulls, and you know, we don't have the check marks for the bears. So bears, you know, again, you can't really, you know, support until broken. So you didn't take that line out. In fact, you successfully tested it. And the PPO signal line right there, I use that zero line on the PPO signal line, which is an IDMA. It's just back testing it again. You had a little whipsaw here, and you can put a line. In fact, I did on another chart. I have it on QQQ in the future. Sometimes you put a line a little bit below, depending on the security, and that seems to be, if it's a little bit below, this is, you know, 0.55, negative 0.55, so just below there. That's kind of the what's defined the recent trends. And again, I'm using that white line as a trend indicator, and it often acts as support and resistance above. So flipped to bullish there, and it stayed back tested successfully. And it's told you all since it crossed back here, bullish trend. So we need to see that go. We need to see this trend line go, and they'll probably go in very, very close proximity if we go. So that's it. If you want to end the video here, simple world, that's what we're watching for on the Qs. The Qs break, I'm sure SPY will go with it. Right now, as I said, we saw more of that sector rotation today. The beat down laggard sectors, which are namely the financials and XLI, those two alone accounted for the vast majority, almost all the outperformance of the S&P 500 over QQQ today. So that's it. Let me turn off post market. Well, no, I'll turn on. Is this the post? No, that's the close right there. This is with post-market trades. We'll just leave on the after-hour trades right now, post-market trades. And then we'll rifle through the FAANG stocks real quick. I just put a post out. You probably already saw that. So again, this is showing after-hour trades. Maybe we'll just turn them off to keep it simple. Here we go. Okay, so Microsoft. This one I did give a check mark, but as I, you know, continue to, I think, clearly impress, one breakdown of one FAANG stock isn't going to take the market down. You're going to need the majority to break down, majority being 3 or more. And Microsoft broke down. It was fairly impulsive, and it closed on a back test. So, you know, if in a vacuum, I'd say this is an objective short entry, back test of the trend line, and it is an objective short entry, but you put the odds in your favor. Wait to see the other FAANGs and QQQ break down, because if they don't, I can all but assure you this will prove to be what we call whipsaw signal false breakdown, means it'll recover the trend line and move back up. So as of now, again, and I put it out in the post, this was the one that had as clean a check mark as I could give for the you know, the bearish case for shorting, but not enough check marks. 1 out of 5 doesn't do the trick. Apple broke down as well. But again, a couple things to it. It wasn't very impulsive. We had 312 support just below, and that's that. Mainly the fact it wasn't impulsive, and you have the zero line, the PPO is still above that. And again, it's you know, broke down, yes, but it's not a convincing breakdown. It's not impulsive, and most importantly, you need the rest to break down. So that's Apple and Microsoft below trend. Let's just leave it at that and call them for what it is. Those are breakdowns until unless recovered. So we have 2 of the 5, but that's, you know, that's not enough to move the whole ship. We have Alphabet here. You can look at both share classes. Almost a perfect test, and you know, of the trend line, still above trend, but precariously. I mean, they dip below. This is how it's drawn. You know what? That tighten that up. That line's not as tight as the other one on the. This is a class C shares here. Let me try to get that trend. There it is. There's the little grab thing. Okay, so what I need to do is I was trying to come in and hit this reaction low right there, this one and that one, There, it's close enough. You guys see where I'm going with that. You don't have to have, it could be a little hair above, little below, but it's a pretty well-defined trend line. And either way you cut it, slice it or dice it, Alphabet, both share classes are above trend and hugging the trend line, but successfully tested. Still have the divergences, so I still favor a breakdown, but we don't have it yet. As I said, these divergences can continue to extend and potentially get burned through if the market goes back up. You got to give them to it today. It looked like the onus was on the bears. They had a couple of the fangs break down. They could have took the ball and run. But again, it's not over yet. I want to get to the futures here real quick. Just wrap up the 5 fangs. Facebook. Here's the primary trend line on Facebook. This was just a minor trend line here. This is the primary trend line, and where Facebook is comfortably above that. Is that a bear flag? Who knows? You only know in hindsight. If we, tomorrow, if we have a impulsive break, a gap down, or a impulsive, sell off at the open, referring to this impulsive drop here, followed by this little flagging type action. Here, let's see what it's doing in the post-market session. Yeah, nothing much so far. PPOs starting to curl back up above the 0 line, again denoting a bullish trend in play right now. Pretty much it's there. A couple little whipsaws there. Again, you might want to lower the line or just call those whipsaw signals. But for the most part, that 90 EMA's remained above there, just like leading into the lows right here. It was well below there. You can roll back and see that. That's it for the fangs. Nvidia. Like I said, in itself, it was a short. It's certainly the odds will go up tremendously if the Qs break down. This short trade could still play out, just like our Netflix trade. We already hit the first target, and we're beyond there. It's still profitable. So, and Netflix is one of the higher. It's not one of the top 5 holdings, but it's right up there in the top dozen or so of the S&P 500. So is Nvidia. Nvidia is within the top 10. I believe both Netflix and Nvidia are. And so this could certainly play out. But again, the odds of it playing out, especially to the deeper targets, will go up substantially if we get the sell signals that I just talked about on QQQ and the FANG stocks. As of now, if you short it today or on this back test, there's a back test of the gap. The gap is resistance. I'm talking about this gap right here. That should be resistance. You have another gap just above it, top of the gap. So ideally for this one would be this. And of course, if we get this and the market breaks down as well, then you have the potential for a lot more. All right, so that's that. Let's look at the futures real quick. Well, let's look at SPY. I haven't talked about SPY much, but I should. SPY, again, was up a lot more than the NASDAQ 100 today. And that's unusual to see that's 2 days in a row we've seen that disparity. And again, it's driven by almost exclusively by 2 sectors, the financials, which are still at the top of this multi-week trading range. So as strong as they've been the last couple days, they're not out of the woods yet. Big old gap back here, very technically significant gap. We're still on a 60-minute time frame. So PPO is starting to turn down. Financials right now are about as overbought as they've been, as they were last time we were at the top of the same part of the range, and we were overbought back here when we were up there. So obviously, if it can punch up tomorrow and get solidly into the gap, I'm talking about this gap again right here, early March, then you have resistance at the top of the gap around 25, and you'll probably still have that divergence in place. We could extend a divergence line out there, something like this. But as of now, well, let's just call it for what it is, a rally into resistance, and 4.34, that's a respective gain on XLF. And again, not surprising with the technicals. I went over that. A lot of the big bank stocks had the divergent lows recently or coming off support. Wells Fargo, again, one of the better looking ones the other day, was one of the few that had a solid divergence on the daily time frame. What else I want to cover? Futures. All right, so let's look at the NASDAQ 100. This is just a 1-month chart with hourly candlesticks and impulsive reversal. There's no doubt about that. I'm talking about the reversal off the lows today. But it's really not much difference than some of these other ones back here. I'm going to get to ES in a second. We had a big reversal here right around the same time, or similar technicals. We had a divergent high. Let me show you what I see there. We had a series of trend lines, but we had this one broken, break down, and a impulsive kickback rally almost as big as this one. And then what happened is we went down, tested that level again, kept the divergence intact, and then resumed the downtrend right there. And that is what we have right now, is a very near term. There's all different time frames. When near term, since last, what was that, Friday right here, the 20th, no, yesterday, we're in a downtrend, near term downtrend, and that's simply making a series of lower highs and lower lows. Here's a potential downtrend to be checked. Any break above that 94, 95 level will certainly negate or call into question any downtrend, because you take out that previous high. So should we reverse here, again, let's just not overthink it. That's where we're at right now, very near term. These divergences are starting to play out, and despite this counter trend rally, it's still well below that previous reaction high. And again, that was a pretty significant resistance level, and former support, now resistance around 94, 95. Potential, I call it a potential downtrend line because we only have 1, 2 reactions so far. We need a third to validate it, so we'll watch for that. And of course, if we do reverse, like anything else, to keep the downtrend intact, I'd be looking to break this previous low and come on down to that my next target there, 91.11. SPY or ES, there it is again. ES was strong due to the financials and the industrials, which were the other sector that was carrying them up. And so, a nice snapback rally took us pretty much to that previous high. So we still have the divergence in place, and it's similar to, that's what I wanted to show you back here. We had a divergent high, we had a breakdown with some impulsive selling, just like this. This right here reminds me of this breakdown after divergent high, followed by a nearly impulsive snapback rally. That one looked like it fell a little bit shy of this one, and that was that same time I showed you that example on NQ. Pushed up, failed to take out that previous high, keeping that near-term downtrend intact. Went on to make a new low, lower high, lower low, lower high, lower low, and that's when that and it didn't just end randomly end. It ended with bullish divergence there. So that's it. Let's see where we go tomorrow, and if we go up much higher, then no, you no longer have a near-term downtrend. You may have a little megaphone pattern there on ES. We'll draw it out like this. It's called an ascending broadening wedge, or a megaphone, because it takes the shape of a megaphone pattern, just like we have on the big on the SPY weekly chart. We have one of those right now, a big one, and that's it. So we're at the top of the megaphone. It's kind of really where we need to turn down here or soon, especially with what I showed you on NQ, to increase the odds that we're going to close down, like I said, this week. What was I calling for? Where we're at today earlier, 3-5%, and then keep the indexes on or below those key moving averages and support levels on the daily and weekly charts. If you don't know what I'm talking about, let me just jump over here. We have the SPY. Again, this is a daily time frame, so we'll see where they close the week. We're a little bit above, just slightly above the 200-day simple moving average, that blue line. And when you go back all the way out here on the monthly chart, we're comfortably above at this point in time the 20-month exponential moving average. But just 1 or 2 bad days, 4.5% just to close exactly on it. So even if we came a little bit down, we're close enough to it to say it's not taken out with conviction. And 2 more days, 2 more up days, it's going to clearly put that in the rearview mirror. And I can just tell you from this, it will chip away at least at the near term for the bearish case. It's not going to change anything, at least anytime soon, for these big divergences we have here. I'm talking the negative divergences on the monthly time frame, just like we had negative divergences here for that 15% drop. Negative divergences right here before the roughly 20% drop at the fourth quarter of 2018, and those divergences have only been extended since then, with that market making a new high after the drop in the fourth quarter of 2018. Big divergences, and by the way, they already played out for a 36% drop. So kind of goes with what I've been saying lately. Typically, the bigger the divergence, the bigger the drop. It's not listed here, but that's 36%, that drop from that second divergent high. So do we go on, make another high, market go pop to a new high, extend the divergence, and then set the stage for a much bigger drop, come down here to my long-term target around 160 on SPY? Maybe, but we won't know for a while. So let's see how this week closes, and we'll go from there. And like I said, watch Watch all those levels on, especially the Qs and those market leading FAANG stocks and the tech stocks. And as of now, like I said, they had the potential to break down today, came right down to the trend line, but successfully held and reversed off it pretty impulsively. So all in all, just to keep it simple, solid check marks so far today. Today the bulls won, and we'll pick it up and see what happens tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.